I'm Charlotte McLeod with the Investing News Network, and here today with me is Doug Casey. You can find him online at internationalman.com, and he has a podcast on YouTube called Doug Casey's Take. He's also the author of 3 novels. Just a reminder before we get started that if you enjoyed this interview, make sure you subscribe to our channel. Doug, thank you so much for joining me today. Great to see you.
Thanks, Charlotte. I hope I don't offend any of your viewers with my ideologically tinged T-shirt. It's a sheep with a mask on it.
I didn't even notice that.
Because the COVID hysteria is largely over at this point. But I still have the T-shirt from the old days. So
I don't think they will probably be offended. So great to see you. We have a lot of directions that we could go in today. And I think where I want to start is with the issues that we see going on in the banking sector in the US as well as elsewhere in the world. These were really making headlines just a couple of weeks ago, but it already seems to be fading. So I want to check in with you on what you think interest is going away so quickly, and what do you see as being next for the banking sector?
Well, I've been pointing out for a very long time, because it's been true for a very long time, that the banking industry itself lies on a foundation of quicksand. I mean, I don't want to get into a discussion of the details of sound classical banking, but in the past, when banks were first formed, and really up until about 100 years ago, deposits were strictly divided into 2 types: savings account deposits and checking account deposits. Totally different businesses, totally different types of deposits. They've been merged and melded today. And in the last 100 years, central banks all over the world have become immensely profitable for the banks by printing up money and allowing them to lend out several times the amount that's deposited with them. So, answer to the question, without getting into the weeds on all this, I just wanted to mention these things, is that no, the banking situation hasn't been solved. All the debt in the world, at some point, it's going to collapse, either with a catastrophic deflation, a la 1929, or a runaway inflation, a la Germany in the 20s. They painted themselves into a corner. Well, it's my favorite print in back of me right now. No, the banking situation is going to reappear as a problem again and again and again, because the whole industry is based on what amounts to a fraud, which is fractional reserve and central banking. So stormy weather ahead.
Certainly, I think it feels that way. And one of the issues that is really coming to the fore right now as we see these banking issues is de-dollarization, the move away from the US dollar. So I wondered if you could speak a little bit about that and what that looks like to you, what we should be watching there.
Yeah, this is a very important thing. For decades, many decades actually, but certainly starting 1971 with when gold was taken completely out of the monetary system with the Nixon devaluation, the dollar has in effect been linked with and backed by oil. It's called the petrodollar. But among the many other things that the Biden administration has destroyed is that system. When they nationalized all of the Russian assets they could get their hands on, how much was that? 300 billion, 600 billion, depends on whether you're counting just the Russian government's assets or the assets of so-called oligarchs as well, I suppose. But at this point, the bell has rung, and people can see that if you own dollars, even outside the United States, because all dollars clear through New York, the US government can take them away from you at will, the way they did to the Russians. Now, the Chinese have been designated an adversary, and they say the Chinese are sitting on over $1 trillion worth of government securities, and they realize that that's a hot potato that the US could do to them, take $1 trillion worth of assets away from them just by stealing it. In fact, this can happen to any country. So this is the reason why, in addition to recognizing that the dollar is being printed up like a third world currency, that people are trying to get away from the dollar. Now, what's happened is that the Russians and the Chinese, and they're being joined by the Indians and the Turks and now the Brazilians, everybody's trying to get out of the dollar system because they realize that the dollar is an unstable currency backed by nothing but faith in the US government. And that is diminishing rapidly. So they're coming up with an alternative currency and an alternative way of trading with each other without using dollars. This is really, really serious for Americans because since about 1980, the major export of the US has not been Boeings, it's not been wheat, it's not been anything except for dollars. The US government ships up dollars, and because everybody prints up dollars, thus everybody accepts them, there are now trillions, we don't know how many trillions of dollars floating around outside the US that actually are a liability against the US government, but actually against the American people. And at some point when faith in the dollar is lost, those dollars are all going to come cascading back into the US in exchange for land and securities and other real goods. So we'll have a lot more money in the US as foreigners want to dump the dollar and less real wealth owned by Americans. It's going to be a catastrophe.
So you've kind of laid out there what happens to the US as the US dollar falls out of favor. And of course, it doesn't sound very good. If we follow it through outside of the US, what are we going to possibly see? Will we get the rise of a new reserve currency, or how does it look for you?
Well, the Russians and the Chinese, two adversaries to the US, have had to trade things between each other using dollars, which is really rather perverse to use their adversaries or even their enemies' currency. But they don't trust each other's currency really either. I mean, the Chinese don't trust the ruble and the Russians don't trust the yuan so much. So I think what's going to happen is that gold is going to be reinstitutionalized as actual money because none of them trust each other's central banks and each other's fiat currencies. They're all fiat currencies. Some are better managed than others, of course. So what's happening now is that the Chinese have a major gold exchange in Shanghai, and you can trade your yuan there for gold and export the gold. So we actually are going back to a subtle gold-backed system again, but it's going to become much more obvious as a real gold-backed system in the future. And I think that's one reason why gold is going higher. I've been involved in gold personally since the early 1970s. I've bought a lot over the years. I've always used it as a savings device. Put the gold away, forget about it. That's what savings are all about. And it's been okay. We've gotten like 50-to-1 returns in 50 years. It's fine for a savings vehicle. And occasionally it's a good speculative device. Right now, relative to everything else in the world, price of cars, houses, meals, clothing, gold is reasonably priced, I'd say. But my guess is that as the world descends into chaos, and I think that's true, we are going to see chaos later this year and throughout this decade, there's going to be a panic into gold because it's the only financial asset that's not simultaneously somebody else's liability. So it's again going to become a good speculation as well as a good savings vehicle. So I don't know if I answered that question directly or got off the topic. But yes, the dollar is on its way out. I mean, it's going to, nobody uses the, look, currencies all have a half-life. They're just things created by central banks. Gold is as I said before, the only financial asset that's not simultaneously somebody else's liability. There's going to be a panic into gold at this point and out of the dollar because there's so many of them. They're like hot potatoes outside the US.
I think you did answer the question, and you definitely brought up a lot of points about gold that I want to go back to. Before we do, though, I want to ask you about central bank digital currencies and how they fit into the mix here, because you're talking about how gold is becoming more prominent among countries that don't want to use the US dollar. Certainly, we've seen central banks buying gold quite heavily in the last months. So how does central bank digital currencies fit in there for you? How do you see that interacting?
Well, they're a control mechanism on the part of governments over their subjects. And it's also, they're hoping, a way to keep the economy propped up. You know, they've gone to negative interest rates until recently. I thought it was metaphysically impossible to have negative interest rates, and actually it is negative interest rates, which we had at the peak. There were about $17 trillion worth of bonds that had negative interest rates. I mean, it's actually a form of tax on savers. So they've tried that, and they've tried quantitative easing. Funny how that phrase has become accepted, because it really means just money printing. But everybody doesn't say money printing, they say quantitative easing. They've tried that, and inflation's gotten out of control, but it's going to get much more out of control in the years to come, because most of the US government's deficits are not financed by taxpayers or by Chinese lenders. It's financed by money printing, selling government bonds to the Federal Reserve. So kind of the last arrow in their quiver, it seems to me, are central bank digital currencies. And at that point, all of your money is nothing but a digit on your cell phone or in your computer. And at that point, everything clearing through the Federal Reserve, it means that they're in a position to debit or credit your account, whether you're naughty or nice, to do anything at all they want. It was bad enough just having paper currency instead of gold as money, but paper currency itself is going to disappear. So you're going to have zero privacy. The powers that be will know absolutely everything that you buy or sell or own. This is a catastrophe in many, many ways. It's going to end very, very badly. These people have overreached. I'm not sure exactly how it's going to unfold, but they're trying to implement it in almost every country in the world. And we'll see the degree to which the average, I guess the average consumer, the average American, the average citizen in the world doesn't have much choice as to whether he accepts it or not. Because if you don't have gold and silver to use to buy gasoline or food, and paper currency has disappeared, and ATMs are going to disappear with them, well, if you want to do anything, it has to be using your cell phone and the digital currency. So you're going to be totally manipulated by the, it's really serious. It's a disaster. It's a catastrophe. I hate to sound so gloomy, Charlotte, but the fact is that Western civilization, which is the best thing that has ever evolved, has been going downhill slowly, starting with about the time of World War I, and the descent has been accelerating. So that at this point, I'm not even so worried about the markets collapsing. I mean, they can print more money and prop them up here and there. I'm really worried about civilization and the culture itself collapsing, which I think is obviously happening all around us. So I just wanted to explain the reason for my bearishness on the world at large, which is one reason I don't like to watch the news so often. It's nothing but, listening to what politicians are doing, what new things are imposing on us, what new stupidities are being, minted out of Washington and other major places like Brussels, Moscow, Beijing. It's horrible. So just wanted to explain why I have a gloomy cast to the way I look at things at the moment. Although, once again, let me try to balance that by saying that I'm a believer in the singularity. This is Ray Kurzweil's thing. And at some point, we'll reach it. And the future will prove to be not only better than we imagine, but better than we can imagine. So let's say we're just going through a real tough patch here for the next decade or so.
I think that does help us understand your line of thinking. And it's pretty interesting to me because usually when I have these conversations with people for our YouTube channel, we're talking about the immediate events. People right now, for example, want to know, what is the Fed going to do next? What's going to happen with interest rates? What's going to happen with inflation and the banks, et cetera, et cetera. Whereas you're really looking far into the future and seeing where we could go. So for the day-to-day, are you essentially not looking at that very closely and focusing on the really long-term big picture?
Well, look, truth be told, most of the reading I do book-wise is ancient history, which is completely, you'd think it's completely irrelevant to what's going on daily in the markets. But I am involved in the markets from day to day. I trade commodities, not every day, because it's not something I want to trade every day. But I watch the price of soybeans and wheat and copper and 30-year bonds and all this type of thing. So I'm involved from that way. I'm very active in my specialty areas, which are resources, primarily oil companies and mining companies. I mean, that's my area of specialty. And I have opinions on all the different markets. But, you know, I'm not one of these guys that in this over-financialized world that we live in, and the world is over-financialized, there's entirely too much attention and capital that's devoted to securities and buying and selling, as opposed to producing real wealth. Those are two different things. So yeah, I'm involved with all these things on a daily basis, and but I'm not I'm not a trader. You know, I'm not hello New York buy, hello Chicago buy, hello Los Angeles, Chicago, and New York are buying, sell. I don't go in for that type of thinking, trying to second guess the next tick on one commodity or another. I mean, that's a fool's game, quite frankly, in my opinion.
I think that helps understand as well. And over-financialized is a great word to describe the world today. I think that makes a lot of sense. I wondered if you could maybe talk a little bit more about your strategy right now, because one thing that I see in our comments from people who are watching our videos, people want to know what they should do with their money with right now. In particular, they want to know how they can protect themselves from the circumstances that are coming. So if there's anything that you could share on that note.
Yeah, sure. The main prediction that I want to make is we're going to see chaos, financial chaos, and other types of chaos. The situation is going to get totally out of control, and the economy and the markets are going to be going up and down like an elevator with a lunatic at the controls, which I think is quite a good analogy. It's accurate. So that being the case, what am I doing right now? I'll tell you what I'm doing and how I'm positioned, and have been for some time. I've been long oil, but especially medium-sized oil companies, especially small Canadian companies, many of which are yielding 8 to 10% in current dividends. And I think those dividends are going up because I can build a case why oil, even from its current level of about $80, is going a lot higher. I'm positioned in natural gas companies, medium-sized ones, once again, same kind of dividend yields. I like the ones, especially in Alberta, in Canada, which is, well, it's not saying much, but it's the freest province in Canada. And they have those same kind of yields. And natural gas, as we speak, is probably the cheapest commodity out there. You ought to pay attention to it because the 25-year low and natural gas was $1.50. That was reached about 25 years ago. Today, it's trading at around $2.20. In real terms, it's half the price of its previous all-time low. So natural gas, I think, is an excellent place to be right now. So that's another observation that I'll make. So oil, gas, small companies that produce them, and metals. All the metals, quite frankly, are, I think, reasonably priced right now. Gold is, look, if it's reinstituted as something resembling day-to-day money, or if not that, at least money for trading between government blocks, I think it's got to go a lot higher. So I think we're in a new bull market for gold. It's going to from $2,000 to $3,000 a year dollars in the next year or so. That's my guess, my bet. But as important it is for you to own individual gold coins, I'm talking about small coins like sovereigns and quarter eagles and quarter maple leafs, that type of thing. I think as a speculator, one of the best places to be is now cyclically smaller gold stocks, which are very, very cheap. They're like all-time lows relative to the price of gold. And at some point, the public is going to pile into them. And since they're not even small caps, they're not even micro caps, they're not even nano caps, some of these stocks are pico caps, they could be quite explosive. In the past, the whole market of small gold stocks, and you can include copper and uranium. I'm a big bull on uranium as well, and a number of other metals, has gone 10 to 1, with individual stocks going to 100 to 1. And I've personally owned stocks that have gone 1,000 to 1, not over a lifetime. I'm talking about over 2 or 3 years. It's absolutely absurd how volatile these things are. But now nobody's interested in them. Nobody owns them. They're really cheap. So that's where I am. That's where I am. I own a lot of real estate, not all in the US. In fact, most is not in the US, because you got to diversify politically, because your biggest danger today is political, not financial or economic. It's political. So you want to diversify internationally. Okay, that kind of sums it up.
I think that was a good sum up of what you're looking at. I want to touch just a little bit more on what's going on with the gold price, because you mentioned you see it as pretty reasonably priced right now. We're at about, I think, 2,020 per ounce. The last time I checked, might be a little bit different. That's close to an all-time high. And normally, investors are told don't buy at the top, right? So can you go into why it looks reasonably priced for you at this level, even though it's so high?
Well, I do agree that I hate buying things at their highs. I tend to be a bottom fisher, which is why I'm buying natural gas right now, which is an all-time low. I like that more. And it's true that gold, relative to the price of food and clothes and cars and houses, it's kind of where it, quote unquote, should be. But I'm buying gold because I think it's going to be reinstituted as money. And they're going to be buying a lot, and because people are going to be dumping dollars. So where are you going to put your financial assets is the question. Anything can happen with the stock market, which is still close enough to its all-time high, or the bond market, which is now going into a definite bear trend, but don't want to own bonds. They're a triple threat to your capital: currency risk, interest rate risk, default risk. Now, bonds are the kiss of financial death at this point. Stocks are still overpriced. I can build an argument why the NASDAQ and the S&P are still way too close to their highs. Not interested in them. So where are you going to put your money? In real estate? Well, problem with real estate is it rests upon a borrowed money, mortgages. And that's a dangerous foundation. So I own a lot of real estate, but it's all for cash, and it's mostly farmland outside of the US. So it comes down to gold. Where else are you going to put your money? Unless you want to speculate in stocks, which we've just talked about. Stocks I like and stocks I don't like. So yeah, I agree. All-time high, don't like that. But I think we're going to go to new all-time highs. We'll see.
Would you put money into silver as well? Would that be a place to store money for you?
I would, and I do, because silver is a much, much smaller market than gold and much more volatile than gold. And unlike gold, most of the gold that's ever been mined, and we don't know, but it's someplace in between 6 and 7 billion ounces of gold are in existence someplace. It's an inventory. It's not used up. Silver is used up in industrial ways. So that makes it more volatile, much smaller market, no inventories, big inventories to hit the market. And there's a certain, and it's been used as money through most of history. So yeah, we could see silver explode upwards with gold. I'm bullish on silver. I'm bullish on platinum too, because it's mostly mined in South Africa, and South Africa is collapsing as we speak. It's horrible. I have relatives that are South Africans, and the stories actually beggar belief. You don't hear about them in the news very often. There's 192 official countries in the world, and in North America, we don't get much news on any of them. We think the world revolves around us. It doesn't. I mean, the US is only 4% of the world's population. Things are bad and getting much worse, and for good reasons. They're getting much worse in South Africa. So I'm bullish on platinum because it's a little bit like silver. It's like so feel good about silver and platinum.
All right. I want to ask maybe a little bit of a fun question. So earlier in this interview, you mentioned the singularity. And when I was getting ready for this interview, I went back and watched some of our previous interviews from years ago. You mentioned that also way back in 2019, and we're also talking about AI. You're telling us about how powerful it could be in helping to look at all the data that's out there in the world. And definitely in 2023, we've seen AI really come to the forefront here. So I wanted to get your updated thoughts there and ask you if you see that as an investable trend, or is this something that's going to help us get through the rough patch that we're in and through to that brighter future?
Yeah, well, AI has the potential to be the current equivalent of gunpowder. Now, gunpowder is a wonderful thing in lots of ways. The problem with gunpowder, and I'll compare it to AI, is that initially the powers that be controlled gunpowder and used it to keep the peasants down. But eventually the cat got out of the bag. And when the average guy got gunpowder, he could dethrone the armored knight on his horse, which he couldn't easily do before. I think it's going to be like that with AI. So to start with, the bad guys, who at this point, I hate to characterize some businesses as being bad guys, but places like Apple and Google and Facebook and all the rest of them have been totally captured by the wokesters, people that have that view of reality that those people do. So it's going to be very dangerous to start with. It's going to aid the state to monitor everybody and predict what they're going to do. And it could be very dangerous in the short run. Well, of course, in the long run, like Keynes said, we're all dead. But in the long run, it's a very, very good thing because it's going to help humans control and understand reality better. So I think it's a fantastic thing, a wonderful thing. But in the short run, again, especially over the next decade, it's a very dangerous thing because of who controls it and who uses it. How do we benefit from it directly? By investing. I don't know how you pick a winner with the AI race. I really don't. So when it comes to, I don't know how to capitalize on that trend directly. Indirectly, it's going to be absolutely wonderful for humanity. It's going to upset a lot of things. A lot of people are going to become unemployed. They're going to have redundant, useless jobs. But, like IBM used to say, machines should work. People should think. Of course, the problem is AI thinks better than most people, and the art of critical thinking has been pretty well lost, at least in the US. So maybe AI can teach people to think critically again. Good reason not to watch mainstream television. It's corrupting.
Okay, yeah. Okay, I think that helps us understand where you're at with AI right now. As we're finishing up, I want to ask about the path forward. So we've been talking about the far out future quite a bit. What is the immediate future looking like for you? How long does it take us to get through this rough period that you see coming? I mean, you've spoken in the past about the Greater Depression. Would you still use that term as something that we're going to go through? And how does it look like for you as we move forward, hopefully getting through this?
Well, the Greater Depression, term that I coined, what we're going through now, this depression, which I define, several definitions we could use, but the one I like best is it's a period of time when most people's standard of living drops significantly. So we've entered upon that, well, some years ago, quite frankly. What's it going to look like? Well, it's going to last longer, and it's going to be much worse and much different than the unpleasantness of 1929 to 1946. So I think in light of that, what you have to do is learn how to speculate, which is an art in itself, very different from gambling, different from investing. So that's a different subject. That's one thing. I think you're wise to accumulate a lot of gold and silver coins in your own possession. It's real wealth that you can put your hands on, not just digital. Diversify internationally, farmland. Like at the moment, I'm on a farm in Uruguay, a small farm by South American standards, only 1,000 acres, but it's nice. So I've got cattle and pigs and chicken and a couple of miles of river and ponds with fish, stuff like that. So yeah, I think that's a good idea, having that. Makes me feel good. And I like being in the country. I don't like being in the cities now. I think the cities could become rather wild and woolly in the future. Could be like the BLM days of a couple of years ago during the height of the COVID hysteria on steroids. So yeah, I like the idea of being in a rural area with kind of rural-oriented people who are used to working with their hands and dealing with reality as opposed to digits.
That's so nice. I think that we can wrap it up there unless you had any final thoughts that you would want to share with our investor audience.
No, be sure you keep me honest, Charlotte, and if you have me back on again, bring me up to speed as to whether I was right or wrong, more or less, in this interview.
We'll check back on that. Thank you so much for being here. It was really nice to talk to you again, and hopefully we will do it again soon. Once again, I'm Charlotte McLeod with the Investing News Network, and this is Doug Casey.